All right. And we are live twice this week, Ali. This is the second time this week that we've
Oh,
gone live. And we're gonna give it a second. We'll say hello to Mr. Sergo. How's it going, buddy?
good. And how are you?
Man, it's always so nice to see you. It's always so nice to sit down with you. That's if you're always a wealth of information to chat with. For
Appreciate it.
the folks that haven't seen Sergo with us before, Sergo is our specialist in the Dufferin County area. His office is in Orangeville. They had a little bit of a fire at their last place, and they're going to be moving to a really nice office soon. So, but Sergo is mobile, so he can
Yeah, I
serve
can
you.
do anything online, mobile,
That's right.
internet, in
And through the
person.
pandemic, a lot of the stuff we did was online or on the computer anyway. So you're
Yeah.
meeting people virtually anyway, right?
Yeah, it's all easier too. I mean, everyone has a life to live, so spending 2, 3 hours on the weekend with me is usually not the ideal situation.
Exactly. So we want to dive right into
Let's do it.
the news of yesterday, where I was sort of surprised, and in a good way, I think. And the Bank of Canada increased that overnight rate by 50 basis points.
Yes, sir.
So I was guaranteeing to people, I'm like, for sure, it's at least gonna be 0.75
Yes.
or 1% because they've been so aggressive, and
Yeah.
then I saw that. So I sort of wanted to pick your brain on that. And we'll also go into what that means for everybody going forward. We'll go into some historic rates for folks that haven't seen us before. We like to look at trends, and then we'll help people kind of decipher what's happening now and what's going to be happening in the future. So there's no uncertainty around your home purchase.
There you go. I love
Okay.
it. Let's get into it.
Awesome. So, first of all, just explain to folks why this is happening and why we went up another 50 basis points.
Well, essentially, it's just based on the inflation rate right now. Even though it's coming down pretty significantly, we're in the sixes right now, which is a lot better than the eight. So on the way there, on the way there.
Yeah.
Essentially, the Bank of Canada has the only lever they can pull to reduce inflation is rates, right? They didn't want to do it at 2020, 21. They were saying that the rates are going to be low for a while, and then inflation had something to say about that. So since then, they've been slowly being it's a loose term, but they've been putting up rates every quarter, or seems like every month at this point. But essentially, it's just their way of saying, you know what, inflation is up. We have to bring it down. The only way we can do that is by increasing rates, and that's where we are.
So then is the idea that if we make you pay more for your monthly costs in terms of your house, the place you live,
Yeah.
you're not going to be able to buy more of the little knickknacks that you have been buying and been driving up demand on, like a big screen TV or something.
Yeah,
Is that
actually, well, you know what? The main idea is to reduce consumer spending, right? So the housing market is not really their primary concern. That only affects the people that have
definitely
prime rates, right? I mean, really, it's not to them. They just want to reduce consumer spending, which is
yeah.
credit card debt, lines of credit. That's the main concern that they want to reduce it on. And obviously, if you're paying more on interest, that means that you can spend less somewhere else.
Mm.
Right. So the housing, I mean, it affects people because it's their biggest payment that they have. So obviously, it's going to reduce the payments and the monthly that people have to spend somewhere else, which that's what the quantitative tightening is. Essentially, all they want to do is just bring back the money that people are spending, and that's why the rates are high.
Yeah, and just looking at it, it looks like it's making some impact. Yeah, I'm just looking at my own sort of spending, and other folks that I've talked to and here and there, like they haven't really made huge change in the spending, because if you like to pick up Starbucks in the morning,
Yeah.
you're not going to all of a sudden go and switch to Tim Hortons.
No, no,
And
for
it's
sure.
like where these habits, you're not going to make people change this stuff all of a sudden. So some of this stuff is getting a little tougher for some folks.
Yeah.
But I think, don't you think they look at that and say, okay, what's the risk of us,
Hmm.
pushing somebody into somewhere where it's real dangerous, where they were just living paycheck to paycheck, what's the risk of us doing that? Because more people are in here than in a place where they're just like freely spending. You know what I mean?
Yeah, for sure.
I think they take that stuff under consideration.
They do. I mean, so let's say that you want to buy a new TV, right? Your TV works fine, but you need to buy a new one.
Yeah.
If you don't have the money right now, a couple months ago, line of credit was pretty low, 3%. You're thinking, I'll put on a line of credit.
Yeah.
Now you're thinking, maybe I'll save for the next 2-3 months and then I'll buy it in cash. Right. So what that does is the reason why there's an inflation, obviously, because demand is higher than supply.
Yes.
So when you increase rates, you do a couple of things. A, you defer people from buying, which gives people to produce more to match the demand, right? And also at the same time, the expenses they're spending doesn't free up as much cash flow. So essentially, they're trying to level off the demand and supply issue, right? That's why we're in this issue where we are now.
That's right. And I can sort of attest to that too. I think it was a year and a half, 2 years ago. I was looking for a freezer and I couldn't find one. Everybody had bought them out. Now there's so many freezers, they're putting them on sale.
Right. Well, I mean, that's what's going to happen, right? Essentially, they're just almost waiting for supply to catch up to demand. I mean, I'm sure the last couple of years, if you try to buy anything, cars, houses, refrigerators, apparently.
Exactly. That's another car. We just put off we're gonna grab a new car. We're gonna get a van because we have so many kids. We were gonna get a one of those Toyota vans that are fully electric. Yep. And there was like one available now, all of Ontario. It was about 8 months ago, but now they're calling us back where the dealership didn't even want to look at us before because they're like, we have too much business. Now they're like, please come back. We have that car. You want it now.
It's in. Yeah, we can actually produce it. So that's essentially what's going to happen, right? You're going to see a lot more supply rising.
Yes.
Which will be good, and then it'll match the demand, and then that's when inflation kind of takes a back seat, starts cooling off a little bit, and then that's where we want to be.
Yes. I'm seeing something a little bit different in terms of supply and demand in our industry in terms of homes. I'm seeing a lot less homes coming onto the market.
Coming up to the market?
Yeah. So there it doesn't seem to be as much, as many people listing their homes. So, that I feel like that, and from what I see, and just having my finger on the pulse of what's going on in our area, is that folks are, if they don't have to sell, if it's not like, I really need to downsize because I don't need all this house, or I don't really need another 2 bedrooms, is more of a luxury thing, which a lot of times that is, which we were dealing with a lot more before. Now people are sort of kind of taking a second look at it and saying like, maybe we'll just wait a while and see what happens, because at the beginning it was like, everybody sort of was panic selling, and now
the frenzy, right? So.
Yeah, now it's stopped, and everybody's like, if I don't have to sell, I don't have to sell, and it's sort of stabilizing, but we're getting a lot less inventory on the market. What have you found there in terms of mortgage approvals and things like that?
I mean, I've seen the same thing. I mean, the last 2 years, it was pretty much a frenzy in buying, right?
Yeah.
The last, I'd say, 10 months has been almost a frenzy in selling.
Yeah.
All right. So now we're almost at that place where people are kind of understanding what's happening. It's not all doom and gloom. People are taking it easy, taking a step back and saying, okay, you know what? I don't really need to move, so I'm just going to stay where I am for now, see how this plays out. I don't really need to buy. So that's why it's bringing almost the demand back to the normal and the supply back to normal.
Yes.
But I have seen in the last couple of months, a lot more people are understanding that, what, this is probably going to be the best time to buy. So maybe start looking now than later.
100%. We have this one investor who I love to chat with, and he doesn't buy houses 1 or 2 here and there. He buys like 40, 50 at a time. He's insane. He buys a lot of pre-construction, buys a lot of investment properties, and he's saying right now he's dumped a few of his properties this year, and he says that now is the best time to start buying all sorts of homes.
Yeah. So 100%. Yeah.
Yeah, because it's not only do you get a good deal, he's expecting, and he's banking for this, and we'll get to that in a second. He's banking for for the interest rates to start going down again by next year sometime. And for him, it's sort of the idea is just making sure he has cash flow. So as long as he has these properties rented, he's good. And
Yeah.
as we've seen, rent prices have gone up.
Oh, yeah. Crazy prices, like 20-30% in some cases, right?
Yeah.
But I mean, I'm saying my predictions, 6 to 12 months is when we'll see maybe a decline in prime.
Nice. I'm excited for that.
Me
And
too.
so when and being sort of novice at this, and I think we all are in terms of rate increases versus
Mhm.
rate decreases. Decrease is
Yeah.
always good, right? But when you start looking at the increases, you're like, oh man, I'm gonna have to pay more. But what I've noticed in
Yeah.
the mortgages that I got is that the payment hasn't gone up a lot, but the interest versus
Principal, yeah.
principal has changed a fair bit. And then so it's been the same amount of money that I've been paying. And then I got this letter saying that, hey, if this keeps going, you're
Yeah.
going to be hitting this thing called a trigger rate.
Yeah, exactly, yeah.
And can you elaborate on that a little bit for me?
Yeah, so essentially once you hit your trigger rate, you're essentially just paying interest on your mortgage,
Nice.
right? So I mean, and that's the thing, like this isn't going to be a long-term solution, Bank of
Yeah.
Canada, or they can't just increase rates and have people pay interest only on their mortgages for 30 years, right? Because
Yeah.
then your amortization is still at 30, so you have to pay for the next 60 years,
Yes.
which is not, ideal, right? So essentially, this is just their way of saying, can we stop demand right now, right?
Hmm.
And as soon as that demand and supply gets anywhere within the 2 to 3% that they have it set to, which is almost there, the first thing to go is going to be rates,
That's right.
right?
And
So,
so then once that trigger rate hits, then is there like you would just work that out with the bank to say, hey, I want to increase my payments to X amount, or what happens there?
yeah, I mean, then you have the option, if you can and you want to make higher payments, you just let them know that, yeah, increase my payments to match. Or you can make prepayments. So let's say if you have some funds laying around that you want to put into the mortgage, there's all kinds of options. It really depends on your situation at that time.
Hmm.
If really that monthly payment is bringing you over the threshold of what you're bringing in every month, maybe ride it out for 2-3 months where you hit the interest only payments and you just stay there until things cool off, or you can have some financial stability and then take it from there.
Yeah. And from you get more of an insight on this, and in terms of like the profits these banks are making now, obviously it's a lot more, right? They're making more money. It's not like they're giving away this money, right? It's their money once they make interest on this, right?
Well, yes and no. So Bank of Canada actually declared a loss for the first time ever.
Oh.
Yeah, right. So, and then when you get the rates from any bank or any lender, essentially they have the same spread in every mortgage essentially. So if the interest rate is 1% or 10%, to them the spread is still going to be the same. So the banks pretty much make the same money. The only way is obviously the demand has gone lower, so they're not lending out as much as they used to, and that's when it hits their bottom line. But the spread on the mortgages or the rate itself, it doesn't really change from what the interest rate is. So let's say it's 1% spread that they get every time. So if the overnight lending that they get from the Bank of Canada is 1%, they'll lend it to you for 2. If it's at 4% that they borrow it, they'll lend it to you for 5. So at the end of the day, they're making the same.
So what happens to that extra amount? Does that go to Bank of Canada or?
Yeah.
Oh, okay.
Yeah.
I see. So they're essentially borrowing the money from Bank of Canada to give us.
Yeah. So yeah, it's a 3-tiered or more. So essentially, Bank of Canada has the money. All the big banks, the top 5, borrowed from the Bank of Canada, and then they lend it out to either direct consumers or businesses or other lending institutions. And that's how everybody kind of sort of makes their money, right? So
Interesting. So, okay, that makes sense. I learned something new today. This is great. So they
there you
don't make
go.
all that money.
No. So banks itself don't really make it. Bank of Canada obviously gets the majority of it, but again, they declared a negative this year. So
Yeah. Now, the prices of homes have gone up. So obviously, mortgages are bigger. So more interest on a bigger amount of money. That means the Bank of Canada is going to be in some kind of surplus at some point, right?
yeah, that's the thing, right? So essentially, I mean, in the long run, they're always going to make the money. It was just a drastic change of what they were lending out to what they're bringing in.
Hmm.
took a hit. It's not going to be a long term. Like they're not planning on losing money for a very long time, right?
Hmm.
This was the first time in their history that they've ever had a negative. So it goes to show you, it's been pretty steady. Economy is usually pretty good. They're on, the rates are, they go with the economy at the same time, right? So you're not going to have ridiculous rates when the economy is not doing too well.
Got it. Um, Another thing I was going to ask you is that do you have any numbers or any? And we don't have any slides. And sorry, Ali, I didn't tell you about this, but I was more curious. And
Yeah.
is there like a default rate on that these guys are keeping an eye out on the folks that maybe can't afford these mortgages? Have they seen that? And if there is one, and if you know the numbers, has that gone down or up at all? And is there like a threshold for this where they're like, yeah, this is acceptable, and then this is not?
Right now, they obviously everything is kind of out the window. Um, so really, there's no set number on what it is. Defaults have been pretty. Actually, defaults went up during the pandemic more than anything,
Oh, okay.
right? Because obviously people just didn't have money to bring in. So if you have no
Mm.
money to bring in, it's hard to balance any budget. So what they're doing right now, they're just kind of going. I think that's another reason why the rates are only went up 0.25% instead of 3/4.
Yes.
It's that fear that if this keeps up, a lot of people might default. So they
Yes.
don't really have a steady or a set number on it. They obviously want to keep it as low as possible. They don't want to hit the double digits, but I mean, it's tough for them to have a number and just go with it because obviously different economies have different time frames and spans, right?
I think, yeah, we'll get into, I think, defaults maybe in another session, because I think we can just unpack that in all sorts of ways.
Yeah.
But as far as these rate hikes they haven't really affected it that much just yet.
No, no. I mean, obviously, it's only been what 1 year since the rates have gone up.
Yeah.
A lot of people aren't up for maturity yet, especially if you only got a mortgage 3, or I guess 2 years ago. You
Yes.
still have 3 years left. So by that time, when the mortgage is up, it might not really affect those people anyways.
That's good. That's good.
Yeah. So the only people that it might affect is the people that went with like a shorter term or the variable rates, right?
Hmm.
And but again, even when you qualify for a mortgage, you're qualifying for a higher rate to begin with.
Yes.
So it's
That was a pressure test.
yeah, right, the stress test. So it was 2% higher. So it's not anything major to be too concerned about. Like it hasn't gone from qualifying at 3% to qualifying at 12. Right. So banks know that the rates change from time to time. That's why they have the stress test.
Hmm.
Even when you're qualifying at today's rate, you're still qualifying at the current rate plus 2%.
Mm. And hopefully those folks didn't go out at the same time where all this buying frenzy was happening and buy a fully electric vehicle.
No, well, hopefully not, right? But honestly, the only thing that people want to keep is their homes. So if they have to forego something, it's usually first things are cars and unnecessary
Yes.
expenses.
Yes, you want to hold on to that home. Now, as we, I have that slide on the screen here. So we've sort of gone up fairly steadily, right?
Yeah.
And what do you think is going to happen? So I've heard a bunch of different things. I've heard there's going to be one more at least increase,
December.
and then I've heard from people saying definitely not. There's not going to be any more because this is too much.
No, there's definitely going to be another one in December.
All right.
I don't know exactly how much it's going to be. Obviously, if I were to take a wild guess, I'd probably say another 0.5%.
Okay.
Just because that would be pretty much. I mean, that puts us 2 months in. It gives us, a better idea what the inflation is. So if by November, December, we're in the 4 to 5% inflation rate.
Okay.
Standard is 2 to 3, so we're not going to be that far off. So for them to go, a full percent or do something ridiculous, we'll overshoot what we're aiming for. I mean, they're already calling for a recession anyways.
Yes, that's already
right.
baked.
So they don't want to put the nail on the coffin, so they might take it, 0.5% just to be on the safe side. And then as soon as it hits that, threshold of their inflation rate, then rates are going to decrease to match.
That's right. And let's put it in perspective for somebody that's, just has a mortgage. They're not investors or anything, and And just for the sake of folks that are wondering, like, how much is my payment going to go up? So let's say they have a average mortgage is likely going to be about $400,000. Does that sound right?
Yeah,
Let's
fair.
say $400,000. How much more after this last increase am I going to be paying since the last increase?
So you
You have to be bang
400,000.
on.
Was that?
You don't have to be bang on.
Yeah, I would say roughly around $500 to $600 extra per month
From just this last increase.
from both this and the next one. If from just
And
this
the last one.
increase, yeah. So, but with that being said, is it going to increase again? Is it going to come down in February, March? So
Okay.
it's interesting watch for sure. The one thing I would say is if you do have obviously a variable rate right now,
Yes.
don't panic, don't start stressing. If you can make those payments until early 2023, you'll have a better idea. If it's a good idea to lock in or ride it out.
Yeah. So I'm getting this question a fair bit, and everybody comes out and they have sort of a general idea what they think is going on in the market, and they come in and say, "Oh my God, the market's really gone to shit." And I'm like, okay, let's unpack that.
Yeah.
And by the time you unpack it, and you sort of figure out what their motives are and how they come upon that, it really is it sort of really hasn't affected people that are, whether you're an investor or whether you're buying because you're moving up, moving down, really hasn't affected you a whole lot because prices have come down, rates have gone up, but it's all been relative and it's all sort of teetering and coming sort of to a middle. And if you were selling to move to another house, you're still in the same spot.
100%.
This house has come down in price, even and your house has come down in price, but it's so much harder for folks to wrap their mind around when prices come down versus they're going up, because going up it's a positive, going down is a negative. So I've been sort of firefighting this with people walking through the grocery store, or when it comes to the office, or one of my clients calls me and says, "Hey man, what's happening with the market?" Because they're being looking to buy. So I've sort of been and I wanted to make this part of this video so we can put it out there. Really, if your goals are clear in your mind, you still can get from point A to point B, and that hasn't really changed for you. If you're somebody that, like our investor friend that wants to buy like 20, 30 houses and he likes to finance them through, B lenders or private, then you might want to wait until the other side of the curve, maybe sell a little bit until then,
Yeah, for sure. Honestly, you know what? The one thing that people haven't, I mean, I don't know if they have, but a couple of months ago, let's say you're buying $1 million home, you're putting down 20%, that's, 200,000.
Yes.
Let's say home, let's say it's come down to, what do you think? I don't know, give me a number. Came down from $1 million.
From $1 million, I'd say like, we've had an average about 150,000 down.
Okay, so let's assume for round numbers, we'll do 8, right? So down payment is now 160. Same house.
Yeah.
Right. So now you had the 200,000 to buy. Now you put 160 to purchase this one, and you have $40,000 in your pocket.
Yes.
Right? So the interest rate is higher, but if you take 40,000 and put it into a bank account, that will cover your payments for the next 7 years.
Yeah.
On interest alone, right? So really, when is the best time to buy? Probably when you can save $40,000 and put it towards your principal, or just keep it in the bank, right?
That's right. And I think the problem is that normal people and everyday people aren't, immersed in real estate and mortgage rates and why this is all happening. So they'll pick up something from what's the name of the channel from news somewhere, and they'll pick up something from a friend that watched the news, and they're like, "Oh my God, what's happening?" And it sort of snowballs, and these guys, and you can't really blame the news media, because they need people to watch TV or else they lose their jobs. So they need to sensationalize this to a point where like people are glued to the TV. They're like, what's happening next? Right. But really, in the grand scheme of things, and if I can just put it in a nice little basket, it's that things haven't really gotten worse. They've sort of stabilized a lot more, and they're sort of on a runaway, and it's it's kind of getting under control as we speak. So we're actually getting into some good times,
Yeah,
which is good.
you know what? I've heard that a lot where like, oh, I'm just gonna wait until the market hits rock bottom, and all these people that bought now can't buy anymore, so they have to sell their homes.
Yeah,
Which is good, but I mean, the other end of that is if a house is up for sale and an investor buys it, it doesn't really affect the regular person looking to buy property because whoever sells their house now needs to rent.
that's right. Exactly.
So
So, in terms of housing, I think we're in not a bad place.
yeah,
But because interest rates are around housing mostly, and that's
right,
been the talk for the last couple of years, it's sort of like, in people's minds, it's like, oh no, the real estate market's crashing. But
yeah,
those people aren't buying and selling; they're not in the thick of it.
right,
But not looking at some of the other aspects that say if we do have a recession, that's not going to be for good for some folks.
right,
But from what it looks like, it does look like we're going to be bouncing back.
yeah,
I'm just looking at some statistical rates. We're looking at this is goes pretty far back,
yeah,
but so interest rates have been higher than this before,
much
a lot
higher,
higher,
yeah,
right? Well, we won't go that far back, but
no,
I think from what you can see here on the screen, we've really haven't gone up that much, and
no,
things are. I think things are gonna, and correct me if I'm wrong.
hmm
I'd say by mid next year, we're probably going to start seeing more deflation and start to see more lower interest rates. So whether, if you are in a variable interest rates and you're panicking and you're wondering what's going to happen, um, I'd say don't worry, things are going to be okay. What do you think?
yeah. I mean, if the whole point is if your mortgage is up for 3-4 years ahead, and you're worried about the interest rates, and now you're gonna have that thing for another 3 years, right? So look at it in the long run. Like, what's gonna happen? Obviously, on a recession, the first thing to go are rates,
Mm-hmm.
100%, right? So that's the one thing to keep in mind is, how long am I gonna keep this property for? What is my term right now? Can I afford the payments? If you have any debt, like a credit card or a line of credit, those would be the first ones maybe you want to get rid of instead of going in and locking in your mortgage rate. Because
That's
what's going
right.
to happen is as soon as the rates come down, all the people that are locked in are going to say, man, like now I have, if you have a fixed term, you're going to have to pay a penalty, which will kind of
Yeah.
offset all the savings that you had.
So the fixed term is a little bit more disadvantageous for somebody that say is more versatile, somebody that does do maybe investment properties, correct?
Yeah, I mean, fixed. It honestly it depends on the people. I prefer fixed if you're an investor. It keeps your payments pretty steady.
Okay.
It keeps everything almost. I mean, it keeps your books a bit more balanced. You're not really worrying about the ups and downs. Your what's it called? Rent goes up every year, obviously.
Yeah.
So that kind of helps offset the rates. So I would say if you're an investor, go for 2 to 3 year terms. Lock it in.
I've heard both of these things. I've heard
Yeah.
investor, you should get variable. Investor, you should go fixed now. So I think it all really depends on what your goals are, right, and how much risk tolerance you have in this
Yeah.
Kind of business, right?
Yeah, I mean, when you say investor, I mean, there's all kinds of investors, right? So really,
Yeah.
just like there's any, home buyers are all different. They all have a different risk tolerance. Some want to have a better cash flow. Some want to take advantage of the tax write-offs.
Yeah.
You can't have both. So,
Yeah. And
so
the
that's
cool thing is that real estate isn't like stock market, so if you invest in the stock market, you're almost like, well, we'll see what happens. Maybe you do a lot of research, but you're still going to see what happens. Where with real estate, you're always on an upwards trajectory from the beginning of time. So where the stock can go, your real estate, even if you just own dirt, they're not making any more of it. They are making more stocks. They're not making any more dirt. So that's going to keep going up. So I think up or down, variable, not variable. I think at the end of the day, for real estate investing, I think you're good to just keep throwing your money in that.
100%. And on the other side of things, if it's your first home that you're looking to buy, now is probably the best time because you're not going to have much competition. You might be able to even negotiate on some pricing. I don't know. That's your expertise, but it's a good way to get in. Yeah, the rates are high, but it gives you a negotiating ability and have an option to look at a property maybe a couple of times before you have to put an offer in and go in firm.
Maybe if you're worried about some cracks in the foundation, you can actually get a inspector come look at it before you buy it. So I'm all for this market where we're able to take a breath and look at properties before we pull the trigger on them. So I'm in with that. I wanted to ask you, and we're going over time, but I just wanted to kind of ask you this. In terms of approvals for mortgages, have you found that the banks or the lenders in general have gotten a little bit more tougher, or are they easier, or what have you found?
You know what? They've been pretty steady. I haven't seen much of one way or another. I mean, because the application volume has gone down, some are a little bit more lenient just because they want to, maintain what they're doing. Some will do some exceptions. Some are saying, you know what, like the bigger banks are like, no, thanks. If it doesn't fit, it doesn't fit, because they make money other places. But some lenders that only do mortgages are like, yeah, you know what, if your credit's a little low or you have a little missed payment here and there, that's okay. We can help with that.
We can work it out. Okay, so they're leaning a little more lenient. That's good. Customer service is improved all around. So say if I'm an investor and I'm asking for some of our investor friends and perhaps myself, and you want to pull out some money out of your investment properties and buy another property, would you say it's a good time?
Yeah, I mean, if the equity is there and you're looking to buy another property, then yeah.
I like that caveat. If the equity's there.
Well, I mean, if you bought the property last year at 80% and you want to go refinance this year, there's not much there. I mean, yeah, $20,000, you can. I don't know what you're gonna buy with it.
100%.
Right, but if you had it for a while and you owe like 100,000 on it, where property's worth 800, you take a couple of thousand, buy a new property. Rent's already high, so the payments that you're gonna offset the monthly payments worth are gonna be good. I mean, rents right now are pretty high.
And you might have an opportunity to get a steal of a deal because there's some people that you could really help out in this situation. Maybe you can only afford, say, $700,000, and this is an actual example of a house that there was a house listed for $850 nearby, and these folks had bought a brand new house, and they had paid I think in the fours for this house, $450, something like that. So for these guys, it was more a matter of like, we just need to get this done with. They ended up selling the house for $650.
Wow, there you go.
So now somebody's happy that they're in their first home.
Yep.
These folks, didn't get as much as they could have, but now they can move on with their lives. But now everybody's sort of content and they've moved on. So there's opportunities out there for folks to be able to maybe go out and help somebody else and get rid of a property and get it off the market and maybe get their first house or first investment property.
Yeah, I even had. I'll make it quick. I even had one cross my desk the other day. Duplex for $690.
Whoa, that's pretty good. That's
what you can live in one.
We're gonna talk about that one afterwards.
Yeah, okay, no problem. You can rent one, you can live in one, you can rent both. I mean, the options are there, right? So
yes. Now, is there one product you recommend right now that kind of sticks out to you? Is there one lender that's like really aggressive right now that you would recommend?
Honestly, it's hard to tell. It depends on what you're looking at. Yeah, I mean, there's all kinds of lenders there for all kinds of people.
Yes.
There's, we deal with 25, 30 lenders at a time.
Okay.
So
give me an example.
even like we said earlier, bruise credits, even bankruptcies. If you have the down payment and the requirements, then you can get in the market. So, people look online and they're like, oh no, I have, bankruptcy, I can't get a mortgage. That's not true, right? Don't let Google or God knows your parents tell you otherwise.
Yeah,
but
exactly.
Honestly, it's always worth exploring, especially right now.
Yes.
Look at if you can get in. The prices are good. You can negotiate. There's some lenders that are willing to help out the first-time home buyers a little bit as well.
So where there's a will, there's a way.
Yeah,
right?
exactly, right. So the one thing that I'm always concerned about is when people come in, they're like, well, I was talking to my dad and I was talking to my brother, and
My
they said
cousin,
don't even try, and the market's too high. And then I run the numbers and I'm like, yeah, you can get approved, and then I go, really? I didn't even know
sweet.
you could do that, right? So
That's awesome.
don't.
So, moral of the story: do your own research. Don't listen to your cousin's uncle's nephew who has a neighbor.
Yeah.
Awesome, man. It's always nice chatting with you. Thank you so much
Likewise.
for taking the time today and hanging out with us and chatting. I know we could talk for another few hours, but we always appreciate your time, and hopefully we see you next time. Anybody is looking for any kind of mortgage products in Orangeville or in anywhere in Ontario, Sergo is a wealth of information. Give him a shout. He will get you straightened out and get you into your next house.
There you go. I
Thanks,
like it.
Sergo.
Thank you. Thanks, Amir. I appreciate it.
Guys.
Always love
Bye.
being here. Talk
See
soon.
you.
Take care.
Bye.